in this section, we're going to be looking at Forex terminologies. We're going to be learning about terminologies in the Forex market or in the Forex industry. Okay. And these are important terminologies that professionals use on a daily basis. And this will help you understand how the whole market works or how the whole Forex business works. And it's very important for you to know them. Okay. So there are a lot of terminologies in Forex, but there are some very important ones. We might not go through all in this video or in this section, but of course, as we go through the course, you're going to learn them. Okay, so we're going to be treating price terminologies in this video. And in the subsequent videos, we're going to be treating other terminologies. So for price terminologies are terminologies that have to do with the price. Okay, that's the price of a currency or price of a currency pair. So in this video, we're going to be looking at spot price, ask price, and bid price, and then spread. We're going to be learning all about this. We're going to be learning what the spot price is, the ask price, the bid price, and the spread are. So for the spot price, the spot price is the current exchange rate at which a currency pair can be bought or sold in the Forex market. It is basically the quote price for any given currency pair. Okay, it's basically the quote price for any given currency pair. Remember, we spoke about the base currency and the quote currency. So the spot price is the direct price of the quote of currency, or rather the quote price for any given currency pair. Okay, so that's the price you see of an asset or of a currency pair when you want to buy or sell it. So for example, let me just open trading view here. We're going to be learning more about trading view in subsequent videos, but I just want you to have an example. So when you open a platform like trading view or a trading platform, there is this line you see. Now you can see this red line. Okay, now you can see this is GBP USD I'm looking at here, and the price is 1.20673. so this is the direct price one can buy or sell GBP USD at this moment. Okay, so this is the spot price. So this is the spot price for GBP USD at this moment. This is the weekend, and that's why you can see the charts moving. But if this was a weekday, of course, you're going to be seeing the charts or the prices moving constantly. That's because the prices are never constant in the market. Okay, so just for you to understand, this price 1.20673 in this case is an example of what a spot price is. Okay, so what of the ask price? The ask price is the price at which a forex trader buys a currency pair. So when you are buying a currency pair, you're actually buying at the ask price. Okay, and then the bid price is the price at which a forex trader sells a currency pair. So there are two prices. We have the ask price and we have the bid price. When you are buying a currency pair, you are buying at the ask price. When you are selling the currency pair, you are selling at the bid price. Okay, and then there's what we call the spread, and the spread is the difference between the ask price and the bid price. Yeah, so the spread is what your broker charges you when you buy or sell a currency pair. So if you initiate a sell trade with your broker is going to sell the currency pair for you at the bid price, and if you initiate a buy trade, your broker will buy the currency at the ask price. And then the difference between these two prices is the spread, which is the profit which the broker makes. Okay, so let's just come to this chart here, and okay, I've enabled the ask price. Now if you see well, you're going to see two lines here. You're going to see two lines here. These are price lines. Remember, we're going to look at trading terminals or trading platforms in our subsequent videos, but I just want to show you this. So this is GBP USD. Okay, I'm looking at GBP USD here. This is a trading this is MT4, a trading platform. Okay, so this is 1.20780. okay, and then this is 1.20659. so as you can see, there's a difference between these two prices. So this one on top is the ask price and this one is the bid price. So So that's just an example of the ask price and the bid price. When you open a platform like this, you normally do not see the ask price, but you have to come and enable the ask price to be able to actually see it. So as you can see, from this price, that's from the red line to this line, we have a difference of, I think, about 10 or 11 pips. 10 or 11 pips. So if you subtract this one from this, you're going to see that we have 10 or 11 pips. Okay, so let's just try to use our calculator. Okay, let's use our calculator to just do this simple calculation. So let's see 780 minus 659 minus 659. So you can see we have a 12 pip of difference. Remember, we spoke about pips in our subsequent lectures. So we have a 12 pip difference in price between the ask price and the bid price at this moment. So if you are going to be buying this market, if you're going to be trading this currency pair now, of course it's not possible because it's the weekend. So, but if you're going to be trading this, the broker is going to be charging you 12 pips. Okay, 12 pips just to place a trade. Okay, just to place a trade. So the spreads are very high at this moment because this is the weekend. So the spreads are usually very high, but they are usually not this high on normal days. Okay. So if you are buying this market, for example, the broker won't buy it from here. He's going to buy it from here. Okay, the ask price is going to buy it from the ask price. So you're going to start at a negative number. So you're going to start at minus 12 pips. And then if you're going to sell this market, the broker won't sell it here. He's going to sell it. Won't sell it here. He's going to sell it here. Okay, he's going to sell it here. So you're going to start at minus negative, or rather minus 12 pips. Okay, so that's what the broker is charging you for placing a buy trade and sell trade in this case. So that's it for the price terminologies. That's the spot price, the ask price, the bid price, and the spread. In our next video, we're going to be looking at even more terminologies. Hope to see you there. Bye.